One of the greatest joys of our job is helping people with the charitable giving. And obviously giving to your charity is critically important, and that's where the real value is. But Drew and I love helping reduce our income taxes and save as much tax as humanly possible while you're still gifting to charity.
And so clients have all kinds of questions about how to do this most efficiently. And the default, which is understandable, is you think of causes you want to support and you just write a check. And that's not necessarily a bad way to support charity, but when we think about giving, there's maybe more efficient means to do it. And everybody's situation is unique. So this is just a video to talk a little bit about some different strategies.
One of the key strategies for us is to help people gift appreciated assets. So if you have a non-retirement investment account that has stocks, mutual funds, bonds, anything in it that's appreciated, please talk to somebody about gifting those assets as opposed to writing a check to church or charity. The idea is that the church or charity can receive those assets, sell themselves, and they avoid all capital gains taxes. The client obviously receives fair market value tax deduction, avoids those capital gains, so everybody wins but the government.
We come across business owners all the time who have worked hard to build a business, and they're really excited about this next season of life where they have a liquidity event and they're able to support their family, do everything that they've always dreamed of doing, and also do a lot of good work with the dollars that they now have. Unfortunately, almost all of them sell the business and then start giving after the fact. And the reality is, if we can have a conversation beforehand, there are a lot of strategies where we can maximize the giving and significantly reduce the tax dollars involved in that transaction before all of it takes place. So business owners, it would be a wise strategy to go ahead and start that conversation well before you are selling the business.
Yeah, with the markets, real estate markets going gangbusters, that's also another great asset. We just had a client that had a rental house and they wanted to do some gifting. Instead of gifting cash, again, we would gift that real estate to their donor advised fund. The donor advised fund would then sell the real estate, avoid all the capital gains tax, you get a full market deduction, and then you have that money in your account in which to give to charity. So business interest, music catalogs, real estate, investments, anything that's appreciated can be gifted and avoid all those capital gains.
And even if you don't have appreciated assets, if you're 70 and a half or older and you've got a pre-tax retirement account like an IRA, the government's passed some laws where you can give money directly from your pre-tax retirement account to charity. This will simultaneously satisfy your required minimum distribution or part of it. And the beauty of the gift directly to charity is it never hits your tax return. The reason this is important is there are a lot of ramifications for having that distribution increase your adjusted gross income. So for instance, Medicare premiums are all based on your adjusted gross income. So if we can give directly from the pre-tax account to charity and it never hits your tax return, your Medicare premiums might be lower. Or the taxability of your Social Security might come into play or not come into play by the way that we give. So even if you don't have appreciated assets, there's still strategies that ought to be considered with your charitable giving.
So again, if you're doing any type of charitable giving, which we are huge supporters of, please be sure that you're doing it in the most tax efficient manner, because if you can give more to charity and pay less taxes, in our opinion, everybody wins with the government, which again is our objective. Have a great day.